Good evening. I'm Michael Filighera from logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Sunday, October 10th, 2021. Let me start by saying that as I come on to do this recording, it is Fleet Week here in San Francisco, and the Blue Angels have just started their Sunday afternoon performance. So the loud roars that we may hear as they fly around the city and over my house is the Blue Angels. Diving right in, I am building a pretty strong case that I believe that the wave 2 correction is complete, or the minor wave 2 correction is complete. I'm starting on the 4-hour chart tonight, and I continue to count off of the all-time highs at 45, 49.50. And I'm completing it in fives all the way up and just need to add, but run out of room, a larger Roman numeral 5 to signify the end of and the completion of a cycle fifth wave advance. So we're in the beginning stages of, or still in the beginning stages of, a larger, longer term corrective phase. And it's going to be at least on a super cycle level, which is one above cycle. And it's a super cycle wave 4. So within that are going to be 3 waves of cycle degree, A, a B, and a C. And then I can break it, continue to break it down. And as far as I've gotten thus far is within the intermediate degree. So this is a 1 degree below primary. So as we form a primary A wave, we're also in the same process, forming a intermediate A wave. And the alternate count, which suggests that the intermediate A wave is done here, the intermediate B wave is done here, and that this is the beginning of a C wave down. Whether I leave it as 1, 2, and then 3, or A, B, and then C, the wave that I believe is beginning now is going to have the same intensity and the same count. It's 5 waves down. Whether it's a third or a C is not really all that important right now. Of more importance is that we're getting to fall into a stronger part of the decline. So within this, I have counted minor wave 1, and we were in the process of putting in a minor wave 2 corrective wave. And that would be an A, a B, and a C. That has now taken place. This was a lot of new money coming in at the change of the quarter and also the change of the month. So moving from September to October, we also moved from third quarter to fourth quarter. So we get a lot of redemptions at the end of the third quarter, and then the new money in the beginning of the fourth quarter. And that's kind of what happened. We got redemptions, we've got no money in, redemptions, new money in, redemptions, new money in. So the new money won out, but of course, being corrective, it stopped. It wasn't the beginning of a more bullish, longer term move, at least not yet. This is still my feeling. So I am putting the C and the minor wave 2 completion points at Friday's opening, basically. So it's almost just pre-opening. So it's a Globex high, I think, of 44.21. And that I'm marking, but I have to put in a caveat here. We have to continue to leave open the possibility that this is just a smaller corrective wave within this completing C wave. It's getting a little bit bigger, but I can't rule it out just yet. So we could be in store for a larger C wave. And then if it's going to come up, then we're back into, and I'll just put those up, into looking at the possibility that if we still need upside to finish this, then we're going to fall back on these levels. 44.45 to 44.55, we'll call it. And we continue to have some resistance at the 44.20, but only just up to or down up to that 44.21.50, which is the previous high. So there should still be resistance there, price resistance there. But then this would be the area that I would suggest it would come. But you can see as we move further away and they're continuing to sell the market, They came on at the start of Globex this afternoon or evening by you, and they bought a little bit, and now the sellers are making themselves present. So what's going to happen from here is that we have a, let me see if I can open it. Why many? I'll just go down to my hourly chart, and I'll open this up a little bit here. And you can see that we've now broken below the 20. That's the blue line. Broken below the 20, broken below the 4, the 8, pretty cleanly. And now we've broken below the 50, the hourly 50. This is beginning to lead stronger support to this having completed this corrective phase. And now we're in the beginning stages of a minute first wave of minor 3. That minor third wave will consist of 5 waves down. That's if it's complete. If this is just going to be, if we still have to go 1, 2, and this is 3 of C, 4 of C, then we still have an additional rally to do. And that would suggest more than likely that we're at least going to get up into these levels. Stranger things have happened. It's not ending up being that way right now as I look at this. But we still have Asian markets to come online, then we have European markets to come online. And so if they all join the party and just start kicking it, then the next phase or the next move for the SP to break and then leave that as the C and the 2 would be 43.62. I don't necessarily below that. It's starting to break below the top of the A wave pretty significantly. And it's now breaking below what should be support, which was resistance on the way up. So when that starts to happen and we're beginning to be able to count 5 waves, then we need to put the C and the 2 there and leave them there and be more prepared for the downside. Now, having said that, I am going to get rid of upside and look to put in, reinstall the downside, because now I can tie it in to the top of wave 2. So let's go up to the top there. Okay, so now on a Fibonacci basis, we're relating wave 3 to wave 1. I'm going to review it all just to be clear. The relationships between 1, 3, and 5 are that they all are impulse. So they will be going in the direction of the trend right now. So the trend is down. So I'm looking for this to begin to fall down. And then we have waves 1, 3, and 5 are related because they in and of themselves will consist of 5 waves. So I'm counting a minor third. So within that minor third down, there are going to be 5 waves of minute degree. And within that first, third, and fifth wave of the minute degree, there will be 5 waves of sub-minute degree. So this is how this is going to break down. And so that's why A, we cannot rush the count, and B, we have to allow for all scenarios here. Now, if I'm looking at a minor third, within it are going to be 5 waves of minute degree. Within that first wave of minute degree are 5 waves of sub-minute. And that's what I think we're running through right now. Hourly chart fits pretty cleanly. So we have a 1 and a 2, and then it starts to drop a little bit faster because it's going to be a third. See, all of the rules, all of the guidelines continue to apply no matter what degree we're on. So again, here we are confronting, and we're going to drop into a third wave. And within that third wave, we should begin to see acceleration. Now it's a sub-minute third. So it's going to feel like some pretty strong acceleration, but at the same time, it is going to not be as intense as the third of the third within minor 3. That's going to be, so because the degree is small, we're still going to see that acceleration, but we're not, and we may get it down to the 200-day. And maybe it drops below, but it'll come back and take it back again because it's not as extended. Okay, so but still, it still carries that premise. It cannot be the shortest wave out of 1, 3, and 5. Doesn't always have to be the longest, but most often it is the longest and the strongest wave out of 1, 3, and 5. No matter what degree we're on, that still applies. All right, so we should begin to see these thirds take a little bit more command of the sell side and bring the market lower. Now, when a full set, when all players are at hand, again, Globex on the Sunday afternoon / evening, now how many participants are really out there right now? So when the other markets open, things will start to change, et cetera, et cetera. So I would expect that it should start to now break since it's now cleanly below that 200. Excuse me, the 50. Ooh. Now, on an early basis, if I get a close below the 50, it's beginning to show some weakness. Now, I'm going to take a quick peek at the daily because that was the one that kind of had a grip on the market last week as it was breaking higher. And as you can see, we broke the 50 both on Friday and on Thursday, but it took it back. So it did not close above the 50. That kept strength at bay and kept weakness in the picture. Then it broke back below the 20 and we accelerated a little bit. And then now we're still below the 20. We attempted initially right out of the gate to get back above that 20. And that needed to happen if there was going to be a push to go higher. Did not, hasn't closed yet. We got a lot of time, but here we are sitting right above the 4 and the 8. I would suspect that they should come pretty quickly. The 200 on the daily sits well enough below a 41.73.59. But within the larger context of this wave, the third and the intermediate third, I do expect that to be broken, but not necessarily tomorrow. But that is when these start to break, and the fact that if we can get a close below the 50 or another close below the 50 and a stronger close below the 20, then our next stop really would be breaking through all of this and getting ourselves down to here, which would again fit for a third wave because we do need it below 42.60, which is the low from wave 1. Wave 3 definitely has to break that. Most assuredly has to break that. And that's not even the absolute minimum. The absolute minimum with that would be that -3 is equal to -1. And that is at 42.08, 42.09. And so my thought is that at a minimum, it's going to come down here and break this on its way to 4,077 down to 4,060. That's the area that I believe that this minor third could get itself down to, or even one of the components within it could get itself down to. So I think we're at that stage. And again, the caveat remains that if they start to buy it up, it's just a fourth, and we're now likely going to go and break above 44.22, head up to that level at 44.45 to 55. That would be the upside picture. So I'm not looking for a major breakout here. I still believe that we're still within the context of that -2. And then my anticipation would be that we would still get the crushing C wave. So what I believe happens now, if this indeed is the scenario, that the market just is basically putting off the inevitable, or whatever the reasons are, and say, okay, we will trade either direction. But right now, I'm just looking at, I think that our scenario does include that we should begin to see some stronger acceleration to the downside. And that is why I go over these in greater detail, because tomorrow when we're trading, in my mind, it helps me better to kind of go in with not an assumption, but an idea of where I should begin to see that acceleration, that larger bar. And right now I'm looking for downside. So I would be looking for the sellers to have stronger control of the market, and that it could drop precipitously because people are going to stop buying. All right. Now we got the sellers are overwhelming the buyers, and if bids are pulled, then it's just going to drop faster because the larger orders go to the orders. So in other words, wherever those buy orders are sitting, that's where they're going to start selling. Okay, so tomorrow, We leave open the possibility that we're gonna start to head higher again. It is not looking that way right now. Hourly, we've broken below the 50. And if we get an hourly close below that, then my expectation and my suspicion would be that we do continue to drop to the 200. Now the hourly 200 sits at 43.62. So I initially would expect some support there. And then if it breaks, I would see maybe we get a little bit of acceleration because that's what's going to happen on the break, but that doesn't mean it's going to continue. We can continue to find support there. We'll pull the market back up and suddenly that becomes like a point of control, just traveling above and below because waiting for additional information, directional pull by buyers and sellers. So that could happen as well. All right, I'm going to leave it there. And trade smart, trade following your moving averages, read the price, read the price action. Very important to keep in line with the bars. And I take them all the way down. So I could be coming down on the 5-minute as a minimum for day trading the S&P. And then these are all very tradable, wonderful bars coming on. And that one, yeah, but see how it failed? That's a 5-minute topping tail and back below the 50. And it went up and tried to do it again, broke back below and then broke that level. And that was the sell. Bing. And you get a great, this is a 30, or no, this is a 5-minute chart, excuse me. I did take it down. And then the 4 is basically just walk that trade all the way down. And so far, it came up and took it out there, but I would imagine the 4 was likely higher at that point and then to continue to drop as the market continues to drop. So good trading. Trade smart, trade according to your moving averages and according to the price action and follow what your understanding of the bars are and then use your Fibonacci and use your Elliott. Have a great trading day. Next update will be on Monday, the 11th of October.